Hello, can you hear me? Are we here? My mic is on. It's on. Okay. Okay, so welcome back to today's video, and we are still sorry again for the interruptions that we keep getting here. So today we'll be quickly going into what we have to discuss, and we'll be very, very, very quick about that. So today we are discussing more about uh, smart money concept, right? And yesterday I began to introduce to us what smart money concept looks like. I began to tell us the basics, began to show us the basics. I showed us things about impulses. I showed us things about correction moves, like so when the way price moves, right? So we said that a market can be in an uptrend, can be on a downtrend, can be on a kind of sideways movement, and we say that in every trend, be it the uptrend or downtrend that we find markets to be in, that there are two major moves that we see, right? We tend to see the impulsive move and the corrective move. So the market has two major waves. You have the impulsive wave and the corrective wave. So this is more like a perfect example of what I was telling you yesterday. So on this aspect, we have a downtrend playing out here, right? So on this aspect, we have more like a downtrend playing out here, and we have an uptrend playing out here, and we have another downtrend playing out here. And in this whole thing, we see this particular side of this downtrend is our impulse. This other particular side is our corrective move, and we have this place again to be another impulse move, and we have this place to be a corrective move. So you see that in a downtrend market goes impulse, correction, impulse, correction, impulse, correction. Now, as traders, if we must make profits, then we must know how to tell if a market has properly done a correction move, right? So as traders, if we must make profit, we must know when to tell. We must know how to know if price has actually done a complete correction move. So let me show you something. Now this is gold, right? And we see gold in a downtrend, and we see during this downtrend there are series of impulses and corrections. There are series of impulsive moves and corrective moves, and I'll show you something about it. So this is a downtrend here. This on our 1 hour time frame. It's a very good time frame to work with. So we have on this downtrend, this is impulse, see the correction move. Now, one category or one characteristic of corrective moves is that they are actually shorter than the impulse move, right? The corrective moves are actually shorter than impulse moves. So that's the corrective move. This is another impulse move to the downside. Impulse moves are always in direction with the trend. Okay, so I feel like to text this down for you. So some characteristics. So characteristics of impulse and correction moves. So the first thing you want to know about an impulse move is that, okay, so we say impulse here. The impulse move. Uh, the first thing is that impulse moves, they are longer. Number one, all impulse moves, they are longer, right? Number two, impulse moves are they are they are always in line with trend direction, right? So impulse moves are always in line with trend direction. That's two there. I will still state more for you. So look at this. So price was in a brief downtrend here, right? More like in a brief downtrend. And what do we see? All the impulsive moves that price made to the downside were what? Were the longer moves. So we have a long move here, and look at this, a short move, a correction move, very short. Another impulse move again, very long to the downside. And we have what? Another short corrective move, another long impulsive move again, and this is a corrective move, though long, but once corrective moves begin to gain length, then we begin to want to see if price is already changing direction. So that's more about the impulse move. I will just give you two characteristics of a corrective move, and we'll run into what we have for today. I want to talk more about our corrective moves today. No, we'll just let impulse move for tomorrow. I'll talk a little about our corrective moves, and we'll understand better. Remember, I said yesterday, I told us we are going to be treating, through mapping, right? Through chart marking, market structure, through market structure. So we are going to be marking charts. I'll just show you certain things about how you mark your charts correctly as an SMC trader. So corrective moves. So corrective moves. Oh, sorry. So corrective moves. So the corrective moves. What's about the corrective moves? Number one, they are counter trend moves. They they are counter trend. So the corrective moves are actually counter trend moves. So all the corrective moves that we outlined in all these places, what you can see about them is that they always move against the trend. So if this is let me mark all this and delete them out. Okay, so for the counter trend moves, let's let's look at this. So this is a counter trend move here. It's against the trend. This is a counter trend move here. It's against the trend. It's a counter trend move. Remember, our trend is what? To the downside. So we see our trend going to the downside. But we see tiny, tiny, tiny counter trend moves here. Right? So these moves are called what? The corrective moves. So they are called the corrective moves. So why is it that market tries to correct? It's just because when price moves in a particular direction for a very long period of time, you will have a whole lot of spaces forming in price, right? If you By the time we get deeper into this, we'll talk about inefficient price action, right? So market tries to correct every inefficiency in its movement. The price is very deliberate. The way price moves, price doesn't move haphazardly. The movement of price is very, very, very deliberate. So when price moves in such a way that it creates a gap somewhere, it comes back to cover for that gap. So some people want to call it during the exhaustion period. So price does impulse, it does correction or exhaustion or pullback or retracement, whatever you call it. So my business with us today is to show us what makes a particular corrective move accurate, right? How to accurately judge a corrective move, that is to say, how to accurately point a pullback. And there is a reason for that. As an SMC trader, you don't want to just start saying, okay, maybe trying to mark structure, oh, higher, lower high, lower low, lower high, lower low, lower high, lower low. By the time you are able to correctly, you know tell about these moves, then you'll be able to know where a lower high is located. You'll be able to know if market actually formed a lower high and maybe it's beginning to seek for what other liquidities down there, downstairs, right? You know when price has formed a lower high and is going for a lower low. You know when price has completed a pullback, right? You will know when price has actually done something called inducement. We'll talk about all that later. So we see counter trend, the corrective moves, they are counter trend moves, and another thing is that they are short. They are shorter than the impulse. So the counter trend moves, they are shorter than the impulse moves, right? So that's another very important characteristics of the counter trend moves. So I will be showing us little about uh, valid counter trend moves or valid pullbacks, right? So we'll be talking about valid pullbacks. So I will take us back to our material now so that we can actually see. Okay, so here's our material here. We can take a proper look. Okay, this is what an impulsive move in the candlestick level here now. This an impulsive move. This is a pullback. Now this pullback is what is valid for some reasons. Yesterday I began to explain to us that every candlestick has four parts. Let me draw a shabby candlestick. So every candlestick has four parts. You know, this is the wick. Here is what the high. Here, if it's a bullish candle, that's a candle that with a upward momentum. Here is what the close. This happens to be the close. This is the open of this candle, and what? And here is the low. Oh, sorry for my handwriting. So here happens to be the low. So here happens to be the low of the candle, here happens to be the open, here happens to be the close, and this is the highest point the candle ever achieved. Now, one thing you want to understand about pullback on this candlestick level, and I'm talking about it from candlestick level because there are certain points you may trade big time frames, such as maybe the 4 hours time frame, daily time frame, uh, maybe weekly time frame, or even the monthly time frame. And you may want to know when price has done a particular pullback and when that pullback is validated and completed, right? So that you can judge your structure properly. So this is where we start from structure mapping and through SMC, understanding pullback. Now, a pullback has happened, a pullback in an impulsive move. Let's say this is a downward impulsive move here. We can only say on this downward impulsive move, we can only say a pullback has happened when a candle forms and takes out what the high of what the previous candle. When the preceding candlestick, now this M candlestick, after M is what? K candlestick. Now we can only say a pullback has occurred when this K candlestick takes out what? The high of M candlestick, right? So when the K candlestick takes out the high of M candlestick, then we say that, okay, we have a valid pullback. Otherwise, no, we don't. We don't have any valid pullback anywhere, right? We don't have a valid pullback anywhere. I I will show us more examples. Now, looking at this is another impulsive move to the downside. This is another impulsive move to the downside. And we have the A candle. We have the N candle. Now, these are what? Retracement candles. They are counter trend candles. Remember, our trend direction is what? To the downside. Our trend direction is to the downside. Okay. I believe you can hear me now. So, uh this is A candle and this is N candle. Now look at A candle. A candle has taken out what? The high of N candle, but we don't have a valid pullback here. Why? Because see this, it didn't take out the low of what? H candle, right? So the A candle has not taken out the low of H candle. That is to say there was no continuation to the downside. There was no continuation to the downside. There was no continuation to the downside here. And because of that, we don't have a pullback. This is not the lowest candle, right? The lowest low must be taken, then the recent high must be taken for us to have a correct and a complete SMC pullback. The lowest low. So look at this on this particular swing here, on this particular swing here, this particular swing, this particular impulsive move. This is the lowest low, the low of H candle, right? This is the low of H candle. Now, when A candle comes in, A candle didn't bother to take out the low of H candle. This is on candlestick basis now. A candle did not take out the low of H candle, right? And on the other side of it, A candle or N candle did not still take out the high of H candle. So in this case, we don't have a pullback. You see this thing? We will just call it what? Inside bars, inside bars, inside bars. All these ones are called what? Inside bars. Inside bars because they formed inside the range, the trading range of what? The H candles. So they are called, both the A candle and the N candle are called what? Inside bars. Inside bars don't result in what? Pullbacks. They are just some manipulation there that smart money uses to confuse traders. So somebody may want to look at this, oh, a pullback has formed here. Now I can trade. Now the reason why I'm talking this much about pullbacks is because, as smart money traders, we go about trading other blocks. We say, oh, this is my point of interest. I can see a fair value gap here. I can this, I can that. A proper order block will not form when there is no pullback, right? It is from a pullback that you have a proper order block, and it's at a pullback that you can get a proper what point of interest to place your sell order or to place your buy order. So it becomes important for us to understand what I'm saying here. If not, we'll continue to make mistakes in picking out our zones to trade from, right? One thing about the forex market is that every trader wants to buy when price is what? At its lowest, right? You want to buy when price is at its lowest and then price begins to move upward, or you want to sell when price is at what? At its highest peak, and what? That you in forex you want to buy low and you sell high. Understanding pullback properly will help you know, right? Understanding pullback properly will help you know when price is at its lowest and when price is at its what? Its highest. So for you to be able to know when price is at its lowest and when price is at its highest, you must understand every pullback that the market makes. You must know if the pullback is a false one, if the pullback just is a continuation of the last what's it called, impulsive move. So in this case now what are we going to see? This impulsive move just continued down, right? So let me erase this whole stuff and let me show you what actually happened here. Let me show you. This is through SMC. Like, this is what smart money traders, this is what they hide from you. Why you don't know? Sometimes you see them and they take some kind of heavy risk to rewards in their trades, and you begin to wonder how they do it. But these are the first rules, the first principles of what marking chart as a smart money trader. So as a smart money trader, when I want to draw my structure, maybe lower high, lower low, lower high, lower low, I count this as what? An impulsive move. This is a lower low. This pullback is an accurate pullback. This is a lower high. Then some other retail traders may want to tell me that, hey, Josh, this is a lower low, right? And this is a lower high. But what am I going to tell them? In pitch trading floor, we are going to tell them that no, that's not how you mark structure. In pitch trading floor, this is how we mark. This is a lower low. This is a valid pullback, and we have a lower high here. And this is a single leg down, right? From here to here is a single leg. You don't have any pullback here, so you cannot, uh, you can't call this a pullback. Simply because I will explain again. I will explain again. Uh, the reason why we can't have this as what? A proper pullback is simply because of two reasons. Number one, a candle is not what? The lowest low here. Number two, N candle did not take what? H candles high. Right? Okay, let me go in a simpler way. The reason why this is not a valid pullback is because H candle high was not taken. Right? The high of H candle, which is this point, was not what? Was not taken out by any candle, be it A candle, be it N candle. Right? The high of this H candle was not what? Was not swept. Remember, everything that the market does is what? Liquidity search. Price goes from region where there are low liquidity to region where there are what? Very high liquidity. Right? So price runs down to a region, runs from a region of low liquidity to a region of high liquidity. The price comes to sweep all the liquidity, and what? It runs back to a place where there are no liquidity. It accumulates liquidity and during accumulation, liquidity increases, and what? It distributes. During distribution, it looks for an area of what? Less liquidity. So now let me show you something. When n candle when n candle comes up, right? There are liquidities that have been what? That are hiding at this candle high here. Mostly when it is maybe a 4 hours candle, even in a 1 minute candle, it is still the same. But the higher time, the higher you go, the more effective this thing is. So you see that once this is the high, right? You have plenty of liquidities hiding here, right? Then price comes up and sweeps it. Then what? Returns. So liquidity, the H candle liquidity has what? Has actually been taken. So in this case, this candle's liquidity is still preserved. No, the liquidity of this candle has been taken, and that's why this is a proper what? Pullback. This candle's liquidity is preserved. This candle's liquidity here, the high side liquidity, every high liquidity here. Okay, look at this candle's liquidity was actually taken. The M candle's liquidity was taken, and we have what? A retracement move, then another continuation down here. So I believe you understand what I'm talking about, but I will still explain again. It's this other marking that we have here. So if you look properly, you'll see H candle. This is the lowest candle here, right? The lowest point in this impulsive move here is what? The low of H candle, and this is another point here. This is the highest point here, but this is a high. Now as long as a candle does not come and take out this, there is no pullback. Let's imagine that 1 2 3 candles have not been formed in our chart, right? Let's just neglect every candle N and these other two ash candles. Let's these bearish candles, and so let's look at only this A as a bullish candle. So if a candle comes here and takes out what? The high of H candle, then we'll call this a valid pullback. Another way we can have a valid pullback in this same scenario is to see something like this. um A candle becomes the prominent candle. How? By going lower than what? H candle. Once A goes lower than H candle, then we will not consider H candle as our what's it called? Our origin again for pullback, for marking pullback. Once A candle sweeps the low of H candle, then we are good. If we want to measure pullback, we'll no longer look at H candle, we'll now begin to look at A candle. Then if this candle, which is N candle, comes and sweeps out the high of A candle, then we'll call this a what? A valid pullback, right? We'll call this a valid pullback. But as long as any of this has not happened in this particular move, then this candle or this movement is actually not a pullback. All we have here are what? Inside bars, smart money traps, tricks to confuse trader. I'm beginning to show you some of our success secret. I'll just show you only few to keep you going. So this is not a valid pullback here. So let's look at our next example. Let's look at our next example. In our next example, we have wipe out all this. I'm going to show us this from the chart very soon. I'll pull up our chart and show us. Remember this just at candlestick level. We have not gone at structural level. At structural level, there's a way to still identify a real pullback, and there's a way to identify a false pullback at the structural level. Okay. Um, Looking at this other marking up or this markup candlestick level, how do we how do we identify a real pullback? So we have our first candle here, then we have the K candle. Now the K candle has formed the lowest low, right? The lowest point of this impulsive move, and this is a high point, not the highest point anyway, but this is the lowest point that's formed by the K candle. Now the H candle comes in, took out what the lowest point, which is K, and also takes out the high point of K, right? Each candle has taken out the high point of K. So what do we have here? We have a valid pullback. Reason being that what? The high of this candle K has been what? Taken. So if we are to draw this on line charts, we'll have something like this: lower low, lower high, right? So this will be our lower low, lower high, right? Then we can have another lower low again. This is a lower high, is it? No. So let's see why this is not a lower high. We are still talking about, remember, we are talking about pullback in correction moves. We say that in every movement of market, you can have either an uptrend, a downtrend, or what? A sideways movement. So if it's an uptrend, what do we have? Impulsive move, correction, impulsive move, correction, impulsive move. And if it's a downtrend, what do we have? Impulsive move, correction, impulsive move, correction, and what? Impulsive move, just like that. So we are talking about corrections, all the corrections here, the pullbacks, right? We are trying to quantify our pullback. We are trying to understand what our pullback should look like from candlestick level. So that we will not just see anything and say, oh, market has made a pullback. Now we can trade, or we can sell, or we can buy, or we can. We don't make trading decisions if we don't understand what the price is doing. So I have explained to us how this one becomes a perfect pullback. Why? As at the point when K candle was formed, K low was the lowest point in this swing, right? And K high was just an intermediate high. H candle comes and takes out what? K high. As long as a previous candle high is taken out, we have what? A valid pullback. Now, the prominent candle, as the swing continues, the prominent candle becomes what? The H candle. This H candle here becomes a prominent candle. Why? It has taken out the low of what? K candle. So it's the prominent candle now. K became the prominent candle because it took out the low of what? This initial candle. H candle has become the prominent candle because it has taken out the low of what? K candle. Now H candle has formed a pullback, right? So we have something like this, a pullback. Then we have this low is more like this low here. Now we want to see if this thing that followed is actually a pullback. If this thing that followed is actually a pullback, or maybe just inside bars, inside bar candle, inside bar candles. Now how are we going to know that? If, for instance, a candle has a longer wick that comes and takes out the high of what? H candle, then we have a valid pullback here, right? Of course, we'll have a valid pullback if a candle takes out the high of K candle. Okay, so let's say A candle couldn't take out the high of of H candle. That is, this candle, for instance, couldn't take out the high of this. Then how else can we get a pullback? We can get a pullback if N candle takes out the high of H candle. So any of them, maybe this one takes out the high, or A candle takes out the high, any of them gives us a pullback. But in this case, we don't see anyone. How else can we have a proper pullback without having to disturb this guy? We can have a proper pullback if A candle had taken out the low. It would have become what? The prominent candle. So this would have been a proper pullback because what? End candle has taken out the high of A candle, right? End candle taking out the high of A candle would have given us what? A proper pullback, because A candle became the prominent candle. Reason being that it has taken out the low of what? H. But here, all our three criteria, or all our three measures were not met. So if our three measures were not met, what do we have? We don't have a proper pullback. We just have a fake movement there, a deceitful movement by price there. And that's one thing that smart money traders know, right? Smart money traders know these things, and that's why they can do amazing things on the chart. This forms the basics of our chart marking. This forms the basics of our inducement picking. This forms the basics of our picking order block, right? So I know that if this is not a proper pullback and I see an order block here, why the don bunny trader they want to say, oh, this is a nice order block, let's trade it out, let's trade it out. you know I know as a smart money trader that this actually is a fake order block, right? And I know that this is an original order block. So while the dumb money trader is waiting for price to go and come back up here, he has a sell entry here, waiting for price to come and mitigate this order block here and sell from there. I, as a smart money trader, I know that this is what? A fake order block, so price won't even come back for it, right? Because all we have was lower low, lower high, and a single leg down here. This is just inside bar of what? The H candle. So I will not be waiting for price to come and mitigate the end candle, right, as my order block. But you see this B candle here, B candle meets our criteria. So if I have to sell, right, if I have to pick an order block, looking at B candle is the right place to pick my order block. So let's say after this structure, U low has been broken and price comes back here, I can take my sell here, and we see price running downward. And somebody will be like, oh, how does FX just know that this thing is going to be, while others are waiting for end candle up here. So this is not a valid pullback, it's just a normal straight impulsive move, with A candle and N candle being what? Inside bars of what? H candles. Look at, this is the low of H candle, this is the high of H candle, and you can see that A candle and N candle are within the low and the high of what? H candle. So there's no pullback there. Definitely no pullback. Zero pullback. Yeah. So you may also want to ask that, okay, but look at this candle taking out the high of the end candle. Yeah, it doesn't matter. Why? Because none of these candles are what? Are prominent candles. They are not forming the lowest part of our swing, right? They are not forming the lowest point. They have no contact with the lowest point of our swing, right? So any candlestick that has a contact with the lowest point of the swing, or any candlestick that forms the lowest point of the swing in a downtrend, right? We are dealing with downtrend now. So any candle that forms the lowest point of the swing in a downtrend is our prominent candle. So if we are trying to sort pullbacks, if we are trying to identify pullbacks, we are going to identify our pullbacks based on what? This prominent candle. So let me show you something about the prominence of the U candle. Maybe you understand more. And after this, I will run down to our chart to show you some examples. And when I do that, okay. Um, Looking at this, what do you see? What do you see? Okay, this is H candle, right? H candle was having what? The lowest point here, but U candle came and what? Formed a weak rejection. This weak rejection swept the low of what? H candle. That is to say, this is the lowest point on our what? Impulsive swing, right? And the lowest point on our impulsive swing belongs to what? The U candle. Is that very correct? So if at any point a new candle, any candle at all, forms and takes out what? The high of our prominent candle, which happens to be the U candle, then we have what? A valid pullback. If at any point in time a candle forms and that candle takes out the high of our prominent candle, which is what, the U candle, then we have a pullback. So that's what happened here. U candle became the prominent candle by sweeping the low of H candle. B candle formed a nice pullback by sweeping the high of what, our U candle. So we have a valid pullback here. So I believe with this you should be able to understand pullbacks on downtrends, and you should be able to understand fake pullbacks, right? You have original pullbacks and you have the pullbacks that are fake to deceive you, right? So this is for downtrend. Let's see one or two example for uptrends here. So when price takes out the previous candle high or low, then the candle colors does not matter. Maybe it may be bullish, maybe bearish. In both scenarios, what, they are all valid. Many times people want to gauge a pullback. They want to know if price has actually done a pullback, and they begin to look for the previous color, or the color of the candles, right? They say, oh, as long as we have seen bearish candle forms, this is a bear this these are bearish candles and we have pullback. No, no, for Christ's sake, no. They are bearish candles, yes, but they don't form any pullback. Why? Because look at their inside bar of what? A bullish candle. They did not take out any liquidity. They didn't take the high side liquidity. They didn't take the low side liquidity of what? This bullish candle here. So there was no pullback here. So any smart money trader that says, oh, I'm a smart money trader, and I have spotted an order block, and this is where my order block will be, on the end candle. Smart money traders now tell you, okay, my order block is on the end candle, and my fair value gap is here. Or let's say, for instance, my order block is this candle, and then maybe this is my fair value gap, and they're expecting price to go, then return back, respect it, and then go. Well, that may happen, but in many cases, because price can respect anything, right? But as a smart money trader, there's a way we do it, and that is not how. This is not our way, because we already understand something. We already know a secret about pullbacks. So these are bearish candles, understandable. Why are they bearish candles? They opened at the upper part, they closed at what? The lower part. Their closing is what? Lower than their opening, right? Price opened at a fine price but closed lower than the open. So it's a bearish candle. Opened high and closed what? Low. It's a bearish candle. But the fact that these two candles are bearish candles does not still, validate the fact that we have a pullback here, right? These are bearish candle formations, but not pullback. Bearish, but not pullback. Bearish, bearish, correct. But pullbacks, no. Bearish, correct. But pullback, no. Okay. So, Animal Crossing fan, well, you are welcome to our live chat. But, I don't think this is the right place to actually do this. Thank you, thank you. Animal Crossing farm. I don't think this is the right place to actually solicit that. So, we'll just go back to our video. So, uh, this is actually not a correct pullback, but this is. So let's look at this pullback, let's look at this, and we'll look at these other ones, and we are going to check it out on our charts, right? On the dummy charts here, then we can go into our live charts, understand it, and we'll end there for today. So, let's okay. So we have an impulsive move towards to the upside, right? We have an impulsive move to the upside. Then we have what? A corrective move to the downside, a retracement move here. Now, which of them on this impulsive move, which of these candles is our prominent candle? The M candle, of course, is our prominent candle. Why? Because what? It has the highest point of our what? Impulsive move. The M candle is our prominent candle. Now, if the low of our prominent candle is taken out, It's swept, it's taken out by another candle. Then we have what? A pullback. So look at M candle being our prominent candle, having the highest point on our impulsive move. Then K candle comes in, didn't take out the high, so K is not the prominent candle. M is still the prominent candle. K is not the prominent candle. M is still the prominent candle. Then see what K does. K came for the low of the prominent candle and swept it or closed below it or whatever. Just it took out the low. That's the most important thing. It may sweep it, it may close below it may weak it, whatever you want to call it. But as long as it has tampered with the low, it has gone beyond the lowest point of our prominent candle, then we have a pullback, right? So this alone tells us that this is a pullback. So this if it had happened that this next candle didn't form, this one was not formed, we just have only K candle and price continued going up, will you be able to say that there is a pullback? Yes, of course. Why? Because the low of our prominent candle was taken. So there is something we call single candle pullback. You mostly see single candle pullback after break of structure, right? Once price breaks a structure, a single candle demand zone can be formed. If that single candle demand zone is actually a pullback, then there is a very high likelihood, there's a very big likelihood that price comes back to tap that place and runs away from there. And they may want to call it, oh, breaker block, breaker block, breaker block. Many people just, oh, this is breaker block. They don't know when breaker block works and when it doesn't work. If there is no pullback, if you don't see any pullback, mostly a single candle pullback in the breaker block, it's it's most likely not to work. So let's say, for example, you have price moving upward, higher high, higher low, higher high. This is a break of structure here because this is the previous structure high, and price violates the previous structure high. Then you have a higher low again. Then price violates. Now this is the previous structure high. Then as price was going up, maybe after violating it, it forms a very tiny pullback and goes up, right? There are certain times people are waiting to come and enter a buy, another buy. They're just waiting to enter another buy from this place here to continue the uptrend. And yes, there are times markets will give you that opportunity to do that. But there are many other times that when you do like that, market sweeps you out, goes down, takes extreme order block, and continues. Why? That is because in most cases, this pullback was not what? A valid one. So liquidity was not taken there, neither was liquidity given. It's just a normal, it's just a normal part of an impulsive move. Now, one thing you should know as traders is that for you to take a trade at any point, there must be what? There must be a landmark at that point. You don't just take trades at, you know, any point you like. As a trader, you cannot come and be looking for sales here in an impulsive move. You want to look for sell, you're looking for the sell here along the impulsive move, along the impulsive move. You may not get the best out of that market. It may work out, right? It may work out. You may actually see some profit, but you may not, you won't get the best out of that market, right? So as traders, we want to enter into the market at the turning point, right? We want to try our best to investigate where the turning point is, and we enter at the turning point, right? Want to enter at the turning point. Want to enter at the turning point. So looking at this on that turning point here. So we want to find out, want to investigate our turning points and enter at those turning points. One thing that pullbacks will help you to do is that pullbacks will help you to define an accurate turning point at the market or in the market, right? Understanding a proper pullback will help you determine what an accurate turning point in the market, so that you can know when to enter. You can know how to spot the right order block. You cannot be spotting an order block in a place that is what that is not a good pullback. You cannot be spotting a good order block there. Neither will you be spotting an order block in, or maybe a point of interest in a place that is not what a good pullback, right? Okay. So that being said, let's see this other one. I'm taking out my time to explain this because this forms the basis of everything that we are going to be doing. So we are going to be talking a lot about inducements, talking a lot about order blocks, talking a lot about order flows, and the basics of all these things is just the pullbacks, right? The basics of all these things is just the pullback. I usually like to give my students a scenario. If you are to hold a catapult, right, and you want to project a stone from a catapult, or you want to project an object with a catapult, right, what do you have to do? You have to pull the catapult, stretch it what backward, then you release, and what it projects whichever object you are trying to project. Or maybe if you are to use a bow, a crossbow, you first pull it backward, right? You place your arrow on your bow, and you draw it backward to the best way you can, maybe to the biggest distance you can ever stretch it, and you release, and what it projects. That's how the market is too. you know this is more like every pullback you see is the market trying to what gather energy to run in its initial direction. So it is very, very vital to be able for us to be able to what get our pullback right, get it right, understand it, know it, identify it properly, so that we will get what the move that is in line with our trend. Okay, so that's that for this. And our H candle here has taken the highest point on our swing. After this pullback, we had what? An impulsive swing there. We have an impulsive swing there. And the H candle has what? Formed the highest point of our impulsive swing. Ooh, are we going to have a pullback here? Let's see. After the H candle, what happens? The A candle forms. The A candle forms. The A candle is not the prominent candle here. Why? Because it is not having the highest point on our swing, right? Now, the A candle equally does not take out the low of what? H candle, so it has not formed the pullback. After the A candle, the N candle forms. The N candle is not having the highest point on our swing, no doubt. The N candle also is not taking what? The low of our H candle. So what does that mean? It simply means that the N candle has not effected a pullback. Neither did the A candle effect any pullback. There was no pullback here. There was no pullback effected by A candle. Neither was there any pullback effected by what? The N candle. So in this case, look at market resumes. Price resumes what? Its movement. So if we had another candle forming here, let's say this particular candle coming down here, taking out the low of our prominent H candle, what are we going to say? Then we'll say, oh yes, we have a pullback here, then an impulsive move. But for the fact that this doesn't happen, or this did not happen, what can we say? We can only say we have what? A single leg. There was no pullback here, there was no nothing. And for easier notation, we can call the A candle and the N candle, we can call them inside bars of what? The H candle. As long as it's an inside bar, you don't have another block there. As long as it is an inside bar, you don't have a pullback there, right? You just have some candles that went to play. And we as smart money traders, we don't make our best choices around inside bar, except you have a strategy for trading inside bar. Of course, I have a strategy, a smart money strategy that permits me to trade inside bars. I have what I use them for, right? I know what I use them for, but not as POI and all that. So that's for this. Then finally, let's look at this other side. Then we'll go and spot it out on the chart, and we'll call it a day. Okay. Okay. So this is what we have here. An impulsive move to the upside. Then we have H candle. Remember, before the formation of H candle, K candle was our prominent candle, right? Was the most prominent candle, having the what? The highest point on our swing. But the H candle forms and takes out what? The low of what? K candle. So we have what? A valid pullback here. Now A candle forms, right? Not taking out the high of H candle. So the H candle is still the prominent candle. Why? Because it has the highest point on what? On our swing, right? So H candle has the highest point on our swing. So it means that H candle is the prominent candle. For us to have a valid pullback, what do we need to see? We need to see any candle at all, any new candle that is forming, take out the low of what? H candle, just as H candle took out the low of K candle and gave us a nice pullback, right? Yeah, of course. So, okay, sorry for the interruption over there. So we are back. So if you look at this, the H candle, the A candle, and the N candle. So now the N candle didn't take the low of the H candle. The N candle didn't take out the low of what? H candle. So the N candle has not affected the pullback. Neither did what? The A candle affect a pullback. So our H candle remains what? The prominent candle. So you may have seen these bearish candles form here, but it still does not what? Indicate a pullback. They are bearish candle, yes. And this bearish candle formed in the midst of what? Bullish candles, yes. But are they pullbacks? No. Are they pullbacks? Of course, no. They are not pullbacks, right? So let's investigate the next one. Price begins to fire upward again. And what do we see? Each candle has what? The highest point on what? On the swing. Then comes U candle, taking the highest point on the swing. That is to say, taking out H candles high. So U candle becomes a prominent candle. Then what happens? U candle is a bearish candle. Understandable why? Because what? It opened high and closed what? Lower. But B candle comes in and takes out U candles low. So what do we have there? We have that the low of our prominent candle has been what? Taken. So do we have a pullback? Yes. And then price continues upward. So if you are to draw this on a line chart, I'm going to be giving us a whole lot of line charts in these 3 days of our working together. So if you are to draw a line chart, what's it going to be like? Uh we have this leg pulling up down here, please not down here oh, down here, then we have up, then we have down here, and this. Now this downward movement is not as a result of A and N, it's as a result of what? H coming to take what? The low of K candle. So we have a direct pullback there. So let's see how we are going to identify this on. Sorry for. Okay, so let's see how we can identify this here. Let's see how we can identify this here on this. Okay. Um, this is our prominent candle here, and this is the low of our prominent candle. The low of our prominent candle is being taken out, right? So we have a good pullback here. Price springs upward again and begins to come down, right? Begins to come down. Remember, we are looking at candlesticks. Candlesticks. We are within candlesticks. So let's imagine that this is 4 hours candlesticks, or maybe this is 6 hours time frame, or this is the daily time frame, right? The daily time frame you want to know, or even the weekly time frame. You want to know when price has completed the pullback, it has completed the correction move, and it is about to get into something impulsive. This is one very accurate way to do it. Okay, so look at this. This is our prominent candle. Why? On this low, this downward movement, it has the what? The lowest point, right? Now, for us to have a valid pullback, it's not just that we see these colors here, bullish candle formation. We don't just highest pullback. Pullback doesn't mean that, oh, I saw a bullish candle and as a result I have a pullback. No, that's not what it means, right? Now look at this, bullish candles formed, but we don't have any pullback here. Why? Because the high of our prominent candle has not been taken. Then price continues to what? Move downward. Price continues to move downward. This is our most prominent candle because it has taken the low of what? This candle here. So this is our prominent candle. And the next candle immediately takes the high of our prominent candle. So what do? We have a what? Valid pullback. Price continues to go down. This candle and this candle. So here also maybe it was not indicated, but we have what? A good pullback. Do we? Okay. So the next one that we think this markup is supposed to be, particular markup is supposed to be here. I think this is an error. So anyway, particular markup was supposed to be here, not here, because we actually don't have anything here. So that's that. And price what? Price turns upward, begins to give us what? Impulsive move to the upside. Look at this. Do we have a good pullback here? Does these two candles, these two bearish candle, are they indicating a pullback? Of course, no. No, they don't. Why? Because our prominent candle simply is this candle and it has the highest point. So for us to have a pullback, the lowest point must what? Must be taken. So price just snaps down and snapped up. Now this becomes what? Our prominent candle having what? The low here. The next candle takes out our prominent candle's low. Do we have a pullback? Of course. So this comes down. This gives us what? A valid pullback. And we are going upward again. This is our prominent candle here because it has the highest point on this swing. This next candle takes out its low and we have what? A pullback. This is our prominent candle here. It has the highest high on this swing and this other candle here takes out its low, right? So from this point here, we already have a valid pullback, right? So we have a valid pullback. Look at this. Keeps going high. This is the highest point on this swing. This one comes and takes it out. So we have, sorry, this is the highest point on this swing. Why? Because this one takes out the high of this. This particular candle takes out the high of this. This takes out the low of this candle. We have a pullback there. We have a nice pullback there. Impulsing to the upside. This is the most prominent candle having this low. These candles come, took it out, and we'll have what? A nice pullback. This is the most prominent candle having this low, right? And this candle comes, takes out that low. We have what? A pullback. This becomes the most prominent candle having what? This low. Opposite candle formation did not reach the low, neither did it touch it. So we what? Have a false pullback, continuous impulse. So that is how we mark our valid what? Pullback. So that's how we identified our valid pullback. So we are going to be stopping here for today. If you have questions, please drop your questions on the comment section. Be sure that I will start by answering up all those questions in our next class, and we'll just go from there. So thanks for joining us today. We are really glad to have you. We are from Pitch Trading Floor in Bayelsa State, and we are a global company. We are a forex trading company. We are also an academy. So we teach you how to trade the market profitably. I'm sure many of you have never ever encountered this kind of a teaching in the forex market before, but these are the secrets that helps smart money traders to fly. So anytime you hear, oh, this guy trades smart money concepts, don't just say he does one thing or the other that's out of this world. He actually does this that I have just told you about, and this is just smaller than the tip of an iceberg compared to what I really want to show you. So you can do well to drop questions, drop comments on uh, our page there, and we are going to reply to each and every one of those comments, those questions, and whatever you have dropped there. Thank you for today, and stay tuned for tomorrow.